Hello guys, today I am going to give you a simple strategy when it comes to trading gold that can make you lots of money even as a beginner, even with a small capital. Simple strategy you can trade even as low as $10 to make profit. The strategy is simple: high low break. As you keep watching and practicing over and over again, you will master everything that has to do with this strategy. Before you start trading any pairs, it is advisable you do your top down analysis before you dive into any pair. Already, we've done the top down analysis on this pair, which is gold. If you've not watched that video, go and watch it. The link will be in the description box below on how to do your top down analysis, which is market structure. This is gold. From our market structure, we have determined our bias. Already we know that gold is in an uptrend. In every buy, there must always be a sell. Likewise, in every sell, there must always be a buy. When it comes to gold, forget about anything SMC, price action only. That is what works when it comes to gold. In any currency pair, in any commodity, in any pairs at all, there's always liquidity. Liquidity is everywhere, and as you can see, when it comes to gold, when liquidity is cleared, it continues in that direction. Nothing like it takes out the liquidity to buy or to sell. It takes out the liquidity and it continues in the direction it was going before. That is good for you. But if you master this simple strategy, you're good. And you won't be panicking when trading gold. And let me give you a simple illustration before I go into the chart. In a case where you have higher high, higher low, higher high, higher low, higher high. So when you come to a market that is like this, what are you expected to do? You're not expected to just jump into this market. Oh, market is buying, let me buy. No, that would be wrong. Because the moment you enter buy, it will start selling, and you don't want that. So the goal here is to catch the impulsive move, the beginning of every impulsive move. So what are you going to do? As soon as you come to the market and it's like this, you wait. Let it come down. At times it can even come down like this, what we call change of character in SMC, which doesn't work in gold anyways. So but it does things like this. You can do something like this, do something like this again. This is where you want to enter. Here is what you want to enter. This is where you want to enter your trade, and boom, it moves. Why? Because as soon as it breaks this low, you think it's going to start selling. No, it's not going to start selling. Remember, you are on a lower time frame, so market will not shift because it did this in a lower time frame. When it comes to gold, even in higher time frame, it doesn't even happen. So when it breaks a low, that's even another confirmation for you to enter. So you target the beginning. The reason being that if peradventure as market breaks here like this, and you just be targeting when it will reverse, the moment it print buy a candle, you just drop into the trade immediately, no wasting time, and your stop loss will be below this low. You put a line there and be looking to see if a candle will close with the body below it. If a candle close with the body below it, it means it's still going to push down to the next zone. It's either you enter immediately or you wait. At times markets still come down, markets still come back to that very zone before it finally push up. So what you do, if the market has already pushed up like this, you wait here or you put a buy limit here, and then it taps you in. Because at times market doesn't just come here and stop. At times it can push down like this. It can push down like this, and then before it will melt back like this. It will melt back like this before it will now start buying. So the reason why you have to target the beginning of every impulsive move is because of all this fluctuation in the market, because at times it might still push down like this before it will melt back, you know. So, but if you are at the beginning, no matter how you push back, you'll still be in the trade. Your account will not blow. But if you're already in the trade in the middle and it start pushing down like that, it will blow your account. Depending on the loss size you used anyway, and depending on your account size. These are the things you have to put in check before taking any risk. So if I want to risk, this is where I want to risk. This very place is where I want to risk. So that even if it did not go my direction, what I will lose will not be that much. I will still save the account. You know. So, but eventually, after it has pushed down and melt back, and then it starts pushing up, then you target the next high. As soon as you break this next high, you take a profit on the next high, and then you reposition for the next move. This will be your first take profit, second take profit, 10 pips apart. So this is where you wanna take this is where you wanna take the risk. And you have a very tight stop loss. And as you're putting this stop loss here, you should also look at your left to see if there's a zone here. Because if there's a zone, the tendency of a candle pushing to that zone is there. So if there's a zone very close to this very low, then you might want to extend your stop loss below that zone, below it, you know. So, and you're watching the moment it closed the candle with the body below it, that means it's going to push to the next zone, but it may not do so immediately. So you will now decide whether to close, in a little profit, or to continue holding depending on your account size. Let's look at this example. Markets opened here on a Sunday, slash Monday. Market opened here. So as soon as market opens, wait for it to create a high and a low. The moment it creates a high and a low, that is your target. So as soon as market opened, this was where market opened. And the next thing, you opened and bought this candle, and then the next thing, it started selling. As soon as it starts selling, it starts creating a high. It started selling, and it got to this resistance zone, and it started buying. This is where you should enter this trade. You enter this trade and your stop loss will be below this low. That's if you have a small account, below this low. But if you have a big account, this is where your stop loss will be. So if we check this stop loss, let's check it below this as we enter here. This is around 80 pips. If you want to use this as a stop loss, and 80 pips, if you're using 0.01, should be $8 is what you have as a drawdown before you continue going your way. So if you don't want to do that, then your stop loss should be from here, which is not that much. It's about 26 pips if you entered here, or 27 pips if you entered here, or 50 pips if you enter here. So, and 50 pip if you use 0.01 is $5 drawdown, which is not much. And if you use anything more than 0.01, of course, if you're trading with a small account, like anything below $100 is 0.01, you should use with one open position. So what you will do is that as soon as it print this candle, you enter immediately aggressively on this next candle. that is where you want to risk. And then if it goes your way, fine. If it did not go your way and start coming down here, you know that what you're going to lose is not much. It's just about $5. So you enter here, you see that it created another high here. What are you going to do? As soon as it breaks this high, is a confirmation is going to go. So this is where you want to enter another position. If you want to enter more than one position, this is where you want to enter another position. Then you start going. The moment you get to this high here, this high here, you close one position. As soon as you enter this high here, you close one position. So even though that this is the valid high, because why this high breaks a structure, this high didn't break any structure, so it's not valid, which is why it pushed this high before it started retracing. As soon as it got to this high, you see that it could not break this high, it started retracing. So what you're going to do is now to wait for another high and low to be created. See, it created another high and another low. So you're watching, is it going to break this low or is it going to break this high? Now, you're still in the trade. You close one trade and you're still holding on with your one trade. I'm teaching you step-by-step guide on how you can trade with gold with little amount without blowing it. When you're trading with little amounts, you don't have to be greedy. Even with big amounts, you don't have to be greedy. You have to manage your risk wisely and take calculated risk. Now, as soon as you got to this high, started retracing. You created a high and a low. Then as soon as you created this low, see that it created this low. What are you going to do? You enter another position here, or you wait for it to break this high. The norm is for you to wait for it to break this high. Once you break this high, what are you going to do? You wait for retracement. So you see that as soon as it broke this high, it did what? It retraced back to this very zone. So what are you going to do? This is where you're going to enter another position. Enter second position. So as you're watching your trade to see if it will break any low and any high, which one is it going to break? You see that it created a high and a low and it broke this high. This is where you want to take your second profit. Meanwhile, the first one you entered here is still running. You have opened three positions, taken two profit and leaving one. So what are you going to do? As soon as you see that it created another high and it started retracing back and it created another low, what happened? It came back to that very resistant. Look at it. But you see, you're watching to see if it's going to break it. You see that it did not break this low, neither did it break this low. It didn't break any of the low. This is another place for you to enter another position. As soon as it print a buy candle, you enter. This is where you're supposed to enter this trade. The fourth position. You enter and you target this high. You see that I didn't get to this very place. So what you're going to do in a case like this is supposed to be your take profit, but as it did not get there, what are you supposed to do? As soon as you see that it got here, it came back, it went up, it created a high and a low, and you notice that it broke this low. What are you going to do? You will sit. As soon as it breaks this low, you will sit immediately, or you wait for a little retracement. You will sit. Then you see that what happened? It started selling. This is a current market. I'm just guiding you step by step on how to trade. Forget about whatever anybody is saying or teaching here on YouTube or even out there in different classes. Forget it. This is, if you follow this, practice this, you will make a lot of money and you'll come back to thank me. If you want me to hold you by the hand to guide you through all this step by step, because there are other things you have to look out for before you can comfortably be using this strategy. So if you want to learn all of that, sign up to my mentorship and I will guide you and put you through. See you in my next video and bye for now. Don't forget to subscribe and share these videos. Like the video and put on the notification bell to be alerted whenever we post a new video. Bye for now.